Good morning, everybody. How's everybody doing on this fantastic Tuesday morning from Amsterdam? JJ, good morning, my friend. How are you? It's probably not, or good afternoon. You said not morning. Good morning here from the East Coast of the USA. We're going to take a look at a few things. I just ran the unusual option scanner on Thinkorswim. Nothing came up. Everything that did pop up is just they're looking for Friday trades only. So them 0 day to expiration options, there's nothing else so far. So not a lot's moving. You can even pull up this thing right here. You can see that you got a couple little penny stocks that are up over, 20% today, but they're getting killed right off the rip. This one's not. Let's see what we got here. This is a killer. This thing's already been halted 3 times. I would probably leave it alone. Um, yeah, I don't like to really mess with these things. This thing is moving really quick. Be careful. But let's go look at Bitcoin and do what we usually do. Bitcoin had a nice breakout. It looks good on the weekly. Today we pulled back in and retested the midpoint of yesterday's breakout candle. As long as that holds, I would expect it to, trade sideways to up. This thing just has it's like the Energizer Bunny. It just keeps going and going. We did get a higher weekly close right here on Sunday. So that does confirm bearish divergence right there. All right. So be aware of that. If it's going to continue to run, like I said, before the halving or any of that, then the oversold readings are not going to help. Right. So as far as taking shorts on it, I mean, you're at a good spot. You got a weekly res right here, and you're just above the 2022 yearly opening range as well. So there could be some resistance here. But like trying to short this thing is getting people wrecked. So be very careful. But you can see that resistance holding pretty good. We did have a nice hourly push back up off the yearly open. That's 2022's yearly open, and it's coming back down. So if the buyers can maintain the midpoint of this candle, then you could potentially look for a long and maybe look to take out yesterday's high. But that's about it, right? I wouldn't look for a massive continuation. Let me run this scan again. Nope, nothing's popping up. So yeah, I mean it's gonna be a pretty boring week, I guess. We got the CPI is gonna come out on Thursday, and then PPI is coming out on Friday. So yesterday was a big day. Yesterday, this thing was up over 80 something handles. That's insane for the S&P 500. Like, massive move. And then the weekly range as well was big. You can see there it says 64, but it gapped up, obviously, from this close here. So it was up almost 80 points yesterday. And you're pulling back up above the upper edge of the expected range. So you almost got up there. Never mind this blue line. This is last week's. It's just the way these candles work. The line starts in the midpoint or the middle of the candle. So it kind of looks weird, but this is this week's range. So we're expecting the CPI to come out. Let's see what they say, right? I haven't looked at it exactly, but I got it pulled up here real fast. Thursday. It looks like they're expecting the year to date or year over year CPI, the headline number, to come out 0.1% higher, and the month over month number is going to be 0.1% higher. Core is looking to come down at 3.8%. This is good. This is what the Fed wants to see. And if it does come in at 3.8 and under, they might not cut rates in March. All right, so keep that in mind. And this pullback that we're seeing could be the market pricing that in, that they may not cut as often as the market had priced in. And then your core month over month is looking like they're expecting it to be down as well, which is good. So these two numbers good. This one not so much. So, and, the headline number includes oil and food. So let's go take a look at oil. Yeah, oil had a nice pullback yesterday. Today would have been a pretty decent entry if we could have gotten it around 72,459. Of course, you would be looking for the short. As soon as you get back above the 50, then you can look for longs. We got above the 50 here, and then it failed. So it does look like, people are wanting to get long oil based on what's going on in the Middle East right now, looking for escalating tensions. If it escalates, oil should go up. But at the same time, you also have market manipulation potentially happening with the oil markets, being the US, is a mass producer of oil now themselves. So they can basically dump a lot of supply onto the open market, and that's what made price essentially go lower. Why would they want to do that? Well, it's an election year. They want everybody to think, that inflation is done. It's not coming back, and it's just a way to basically blind people from reality. But we are seeing more calls being purchased on oil than what was happening a few weeks back. So a few weeks back, this thing was heavily shorted, heavily shorted. So we'll see what happens with oil. Has it found support? Is it going to bounce? If you want to short it, like I said, always wait for a resistance or supply zones. Look for short entries there. Those are going to be your prime spots. You can see how it traded up to supply, got a little bit higher. This is to basically stop out all the early shorts that jumped in right at that price. I mean, unless you had your stop, higher than this, you more than likely ate a stop, and then oil went off in your direction. Also, be careful with oil because there is crude oil inventories or oil inventories today. No, tomorrow. So you got crude oil inventories tomorrow. And it didn't really matter because last time we had this, it was a bullish number for oil, and oil ended up selling off. So I would probably stick with the trend. Right now it's choppy and sideways, but the overall trend is definitely down. And as long as you don't want to be fighting the trend. So pull up your exponentials here. You can see that, it's down. The trend is down. So you want to look for short side entries on oil until at least you get above the 21 on the daily, which you did here, but then you sold off. So there was like the trap, if you will. On the weekly, it's still very, very bearish. Just chopping sideways, but I mean, I could see a spike up to there, but you got that a few weeks ago, so it may just head lower from here. We don't know what it's going to do. It's at a big area. This is weekly support down here, and it's holding. So that price is $69. If I could get oil down at $69, I would probably be a buyer. All right. I'd buy some long dated calls or something like that, or buy a spread so that way it's easier to manage the risk. And Bitcoin, like I said, it's not really doing anything today. I mean, it's not doing anything today. You got it did pull back to the midpoint, but you're just chopping sideways on the hourly. So, I mean, it keeps breaking out to the upside. I would look for upside entries, daily supports or whatnot. This morning, it looks like it's trying to struggle a little bit, and MicroStrategy is selling off or was selling off earlier. This is going to be more so based on the fact that Michael Saylor is selling a whole lot of his shares so that way he can buy more Bitcoin, he says. But I've noticed a pattern where a lot of big CEO guys have sold a lot of shares of their company this year, or at the end of last year. So they probably see something coming. They probably see a recession coming. Who knows? Brian wants me to look at EWI or longs. I don't like it. It's at support, but I mean it looks like it's selling off, right? But that's at potential support. It's not a weekly support. It's not a monthly support. I don't know what that line is actually. Why I drew it in. This is actually support. That was just an old range to break out of. So yeah, I don't know. I don't know if I like it. 61.14 is the price it needs to get to. And then see if you can get a bullish reaction off that. Your momentum oscillator, look at the slope, right? Like yesterday, you closed up, was nice and strong, closed up on the day. Today you gapped down. The slope on your momentum oscillator is pretty, down, right? Like it's pretty bad. It's almost straight down. So you got more bearish momentum than you do bullish momentum, is what I'm trying to say. All right. Riot. I had put on short calls on Mara that were going to expire this Friday. Obviously, with this move here, I had to take them off. The reason is simple. You can't see that chart up there. Sorry. Let me pull up Bitcoin. Whenever Bitcoin breaks out like this, Mara and Riot can really cook to the upside. So I don't want to be sitting in long calls or short calls at $30 because that's where it was. I shorted a $30 call, and yesterday it got up to 26.48, 26.70 actually. So my short call is right there. That's too close for comfort for me, right? So I had to close that position. It didn't lose money. I closed it. Well, technically it did. I mean, because I closed it at $0, but you got to pay fees on it. So yeah, technically I lost money on it, but just the fees. So currently the only position that I'm sitting in the small portfolio, which is not, it's barely up on the year, but we just got started on the year and I haven't found anything yet really to trade, is the short on the XLF. And that's just the financial sector. And the reason why is because this thing was on an absolute tear without a pullback. Also, your JP Morgans, your Bank of Americas, all of that stuff they're getting ready to have earnings. So here's JP Morgan. We're gonna have earnings on Friday. So what I'm hoping for, or not hoping for, but positioned for, is even if they beat on earnings, we get a pretty nasty, sizable pullback, right? Because this thing ran too far too fast, in my opinion, but that's just my opinion. That doesn't mean anything. Markets can do this You know what I'm saying? It can go higher. It can do this twice, right? As it has been consolidating for what? We can say since this candle here, you've been consolidating. 1, 2, 3, 4, 5, 6, 7 days. You've got this is your all-time high, old all-time high. So you're literally consolidating under the old all-time high, which could potentially mean a breakout is coming. So if it does happen, I will simply close that position for a small loss. But if, all of these bank earnings, all of them are going to have to be good in order to cause the XLF to go down. It's not just one bank, it's all of them. BAC's got earnings coming up Friday as well. And then I think Goldman Sachs is next week. Yeah, Tuesday of next week. But it's doing the same thing, right? You're consolidating gains. Whenever you're consolidating after a big move like this, you're typically wanting to look for bullish positions, not bearish positions. Because basically what's happening is if you put a Bollinger Band on there, you're going to see that you're just basically, well, not so much, but they are tightening up a little bit. We can go to a different chart and I can use the Bollinger Band oscillator. I think this one has it real quick. Yeah, you can see. So this is not a non-directional indicator. Basically, all of it it's just showing you volatility, right? Volatility. So when it's moving higher, it means markets are volatile. And that could be either to the upside or to the downside. It's not a directional bias indicator. But you can see how you're flat here. Like this is saying this thing can go up or it can go down. And since it's consolidating at the highs, there's probably more of a probability that it goes higher. But we'll see. We'll see if it has bad earnings, it'll drop. But either way, this will end up popping. It's just depends on how long it stays down at the lows like that. But this means a move is coming. Just we don't know which way. Since it's been up so long and it moved up really, really quickly, maybe, just maybe, we get that move to the downside first to liquidate any over leveraged longs up in here. And then I can close that XLF trade out for a profit. But we do need to find an actual something else to trade other than just the XLF because it doesn't move very fast. But the problem is still skew. The skew is still jacked up, so it makes putting on vertical spreads or in-out spreads not very good. Not very good. Basically, it makes them too expensive to put on. Let me go look Goldman Sachs real quick on the implied volatility after earnings is down in the 25, so like 31 days out. So you're not going to be paying a whole lot more. But to put on a $5 wide spread, it's going to cost $282. That's not good. That means the max amount of money that you can make on that would be $212. So the risk to reward is skewed because the skew is skewed. Skew you. Anyways, yeah, that's got everything messed up. But anyways, since that's why I basically got the XLF on, it gives me the ability to trade some of these bank stocks. And I'm not expecting them to crash, right? I just have a short position on a put position. What's up, trader says. Oxum, what's going on, my friend? Took a short on the 21 daily on oil. Nice. So right there, beautiful. Yeah, I like it. You'd want to be looking to take profits around, around 71.12 maybe if it gets down there. Yeah, I would start looking to take profits down there on that if it gets there. Good stuff. Good stuff. I rarely use RSI except 50 test on daily and weekly with Confluence. Yeah, that's the only way I use it as well. The thing it try to measure historical, i.e., drawing up, selling, buying can be better gauged with order flow or even CVD. Um, I don't know if they make an indicator that shows order flow, right? You can look at candlesticks and judge and gauge what the order flow is, but like, I mean, I can see order flow with options. I can see if they're buying or selling puts and calls, but like as far as an indicator, I'm not sure what you're talking about. You can use whatever you want to basically do whatever, right? I'm just trying to teach people the way that I make money doing it over time, right? Longer term. For instance, let's look at AI. All right, so AI, we seen it doing unusual options activity a few weeks back. So we got long and it just fell, right? It fell flat on our faces. We were looking at the 50 to get long right here, right there. We didn't, but I'm saying that's when you should have gotten long, and the next 3 days you would have made money, right? Just based on that fact alone. Wait for the close, buy your calls, and then close them out 2 or 3 days later. You're good, all right? But now it's structured more like bearish, right? So now it looks like more than likely people would be putting on puts. The reason I don't want to short this is because this thing has a very high short float already. And when you have a high short float, look at this short float, 35.4%. That's huge. So sometimes you can see when you get a high short float, when you try to get short, you actually get the opposite. You actually get a big move to the upside, which is what's called a short squeeze. So this one is kind of like if I was going to buy it, I guess one could arguably say, yeah, you can buy it now. Basically, yesterday looks like the sellers have dried up as you got this nice bullish candle. But I mean, it's still obviously trending down. I mean, there's still a clear downtrend here. But I mean, it's sideways more than anything. Like a rounding bottom. So if you do want to long it, I can see the reason for the trade. And the options on it aren't that expensive. I don't see any earnings. Um, it is not a trending stock. This is not trending. All we got to do is put moving averages on it, and you can see that it is not trending. Right? It's literally sideways. This is on the daily time frame. On the weekly time frame, it looks like a freaking sell. Yeah, on the weekly, this would be a sell. I would have sold it at 28.56 if it wasn't if it didn't have that massive short float. I mean, look at that. It just traded right up to last week's open. Boom. But since it's got that massive short float, it could be a trade we could take. The options on the call options, the implied volatility 24 days out is at 65%. And it just goes up the further out you go. So you're buying a high IV. You're going to pay a premium, right? You're going to pay more for the options than I would like to. Remember, when you're trading options, you want to buy a low IV. You want to get off me. You want to buy a low IV under 50. Under 50. So this 24-day strike looks to be the best. It's the cheapest one. It's the cheapest one at 66.5%. So that's the strike I would choose. But then the question is, does this thing break out before 24 days is up? You know? But you can risk $1.88. That's $188. But you don't have to risk the full amount. You can risk, half of it. Or risk $60 or something like that. Expecting the breakout. Boom. All you need to do is just go up a little bit and you'll make money. The best way to look how much is this right here. So if it moves up $1, if you buy the $28 strike and it goes up to 29, you're going to make 232. So you'd be flipping it from, we'll buy, say, the midpoint, which would be what, 184. You could get 234, 235 out of it on a dollar move. Okay? On a $2 move, it starts to look better. On a $3 move, you've doubled your money. All right? So that's just the way you would have to look at it. But with this being so near term, 24, your theta decay is going to start. It's a rapid burn. And that rapid burn, I mean, you would literally need this thing to break out this week or next, tops, by like Tuesday. Or you're just going to start losing money on the premium burn, theta decay. Also on the implied volatility. The longer it stays sideways, it'll drag that implied volatility down. And you'll lose money that way too. But it is a viable player. I mean, it's one that can go either way, which always, whenever you're taking directional bets on any stock, you're literally, it's a 50-50 shot, right? But when you're trading with options, it's a little bit different because you've got those other elements into the pot as well. You can still lose money even if it does go in your direction. And you're sitting at 28 here, 27, 28, right? It's got to go all the way up there just to move 2 strikes. In order to make, double your money, you would need it to hit all the way up here. Which isn't that far, but you would need it to happen soon. You'd need like 1 or 2 of these bad boys. 1 or 2 of them bad boys. Sorry, I was just looking at something. All right. RSI mainly now works because traders believe it works, i.e. self-fulfilling. This is not a trader's market driven by fundamental inflows. I don't buy that for 1 second, bro. And the reason is simple. because I use this strategy on a daily basis and you watch me do it all the time in the Discord. You know what I'm saying? Or I might have you might not be in the Discord. I'm not sure. I might have you confused with somebody else. But I'm just saying, like, I mean, I can show you time and time again where it works. Obviously, there are times that it does not work. That's the same with anything. Anything in trading works. It just doesn't work every single time. If you could find something that worked every single time, then you would be a trillionaire. Right? But I mean, if you tell me what that inflows indicator is, I'll throw it up on the screen and take a look at it. I mean, I don't mind looking at indicators. I got 6 of them right here. I don't know why I have this moon phase one. I don't use it. I like this one a lot because it can show you basically, it's like the Bollinger Band. Show you like when something is massively oversold or something like that. But I mean, there's a million different indicators. It is what it is. I'm not necessarily like basing the whole trade on the RSI where it's at. There has to be other factors associated with it. That's why I'm not just outright shorting this thing right now. The indicator shows that it's a short, but because I know that it's got such a heavy short flow or short, it's got such a heavy short float, I can't, because that breakout can happen anytime. Like, I follow a guy, a short seller named Mark Codes, and he's all over this one stock, right? And it just so happens that now, since he has a big following, that is the heaviest shorted stock in the marketplace right now. Right? So now anybody that's following him and wants to jump into that short, they're potentially taking a chance on getting their faces blown out. But the company isn't good. So, I mean, I don't expect that to happen, but it could. With AI, it's different because it's literally AI. It's named AI. That's why people are trading it. What's up, everybody? What's up, Adam? Good morning, Heath. Can you please take a look at Filecoin and Cardano? Yeah. It's Phil, right? It's just Phil USDT. Stupid. You know what it is. So it's pulling back. It's pulling back pretty heavy. My gosh. My goodness. Yeah, this thing is in a range. It had a 159% run up, but last week it sold back off. It doesn't look like people are buying this, but there is a potential support zone right there. That's resistance. It's not support. It's old resistance, but old resistance can act as support. So you have a daily support right there. I would just keep my eyes peeled on this price right here. If you would have bought it yesterday right there, you would have made money, right? I don't know if you will today, but there's only one way to find out. If it gets down there, see if it holds on a smaller time frame chart. You can watch it intraday to see if it holds at that price. If it does, you can take a chance on it. I don't know the fundamentals of the coin. I don't know what it does, or what the company does, but as far as the technicals go, I mean, this is a pretty rapid collapse. But the RSI is not showing that, right? It's not showing that it's super rapid. Unfortunately, it is showing that it is still a sell at resistance. So the short would have been to sell the open of today, which happened last night at what, 8 o'clock, 7 o'clock. I think it's 7 o'clock now, right? That would have been the trade based on this. But we'll see if it holds when it gets down here. I'm not a huge fan of it, of buying it. And then what was the other one? I've lost it. Give me a second. Cardano. Damn it. I forgot Cardano's ticker symbol. ADA. Same thing. This had a nice run up, but now looks like it's losing its bullish momentum. You did have alt season, but alt season might be gone because of this right here, right? You want to look to buy alts whenever Bitcoin dominance is going down. Now that Bitcoin dominance is pumping again, these alts are going to have a hard time getting any kind of support. But yesterday was a bullish engulfing, and it was around the midpoint of this breakout candle here. So watch 49 cents, 49.47. As long as you're not closing daily candles under that price, you could potentially look to get long, as this could be a retest if it gets down there. If not, we can go intraday and see if there's an intraday support that's holding it up. I don't see anything on the 2 hour, the 4 hour. It's the 1 hour. It's this right here. So if you're unable to close an hourly under this price, then you're not likely going to test daily support. Just keep an eye on the chart. I figure you're probably going to break down in the next hour or two. Unless it holds. If it holds, then you'll look to buy a retest of that. So these are the two areas where you can take your trade and you would base your risk. Well, if you got long here, obviously your risk would be the low of day, which is this area right here. If you take this trade, then your risk would have to be the low of this day. So that's a much bigger spread, but it just means you need a bigger move. Dominance is trading back up to resistance, right? It's trading right back up to where it fell. This isn't a tradable asset. I'm just saying it's getting back up there where it fell. But all through here was your alt season, right? That's when you wanted to look to buy alts. Right through in here, buy alts. This is not when you want to buy alts. Like all the ones that were massively pumping here a few weeks back, that's why they were massively pumping. And Bonk is the one that everybody refers to, but it's been absolutely murdered. Absolutely murdered. Let's see. Yeah, it's down 62%. So all the late traders that got into that, they got killed. Now it could pop again based on a short squeeze, but it's, I mean, it doesn't look like a rug pull. It definitely looks like they are selling it. On every spike up, I would be a seller on this, but I can't trade it on weeks. I don't know if I can. Let me see if they've put it in there yet. No record. All right, so I still can't trade it on weeks. I don't know if you can trade it on. I don't know what futures Coinbase offers. I think Coinbase offers futures now, but I don't know what if this would be one or not. So I can't trade it anyways. Bitcoin's testing hourly resistance right now. So it looks like the midpoint of this candle is holding. Or one could arguably say that hourly support is holding. Did hold. And you're running up. So I wouldn't buy Bitcoin now. This would have been when you wanted to buy Bitcoin. But that's also, like I said earlier in the stream, why I closed out the Mara trade. Because Mara, I mean, here was where my strike is that I was short. One candle can get there. You see this? You could have one of those and boom, that trade would have lost. So once I seen Bitcoin broke out, I instantly closed that position as soon as the market opened. Good morning from Florida. That's where I am. Can you look at Tesla, please? Looking for a potential level of support to buy more shares for long term. Yeah, we can look at Tesla. Tesla's been getting killed, and I do not know why. What's up with these fibs, dude? Who did that? Had to be me, right? So we were looking for longs right here on Tesla, and those longs paid. But once it got up there, I mean, it instantly came back. I don't like that. One thing. All right. I don't like that at all. Um, so yeah, I'm not necessarily sure why this thing has taken a beating when other tech stocks are not. I mean, Amazon, Apple is, well, Apple's taking a beating based on lackluster sales. Apple's given back 50% of that move. I mean, Apple's probably a buy. I just wouldn't buy it because it's, it's oversold, but if you wanted to buy Apple, like now would be a good time to buy Apple. With Tesla, you basically need the momentum to the downside to stop, right? It just isn't. It did break out of this wedge or this channel, whatever you want to call it, back in October when everything pulled back. This one did too. So it didn't get that big, massive rally like everything else did. And that was, a little bit one of the reasons why I haven't went balls deep back into Tesla long. Because if it's lagging the rest of the market, there's a reason for that. And we don't know what that reason is. I know that they missed on deliveries, but I mean that's nothing new, right? Tesla does that all the time. But you are in an area of support. So I would probably watch this price what is it, 233.59, and see if today closes under it. If you close under it, then it's coming all the way down to 223. More than likely. If it doesn't close under it, then continue to watch this price to see if it holds the support. If it does, you could potentially buy it. But just remember, I know it's for a long-term hold. I don't know where your first entry is if you already own shares. How much is it going to affect your cost basis? So keep that in mind. But that's a pretty momentous move to the downside. It's a $30 move. Pretty big move. I don't really love it long right now until it starts to find support again. This is the price that I like for support for now. Like I said, if it loses that, it'll probably come back and retest this breakout candle. More than likely, it would drop all the way to 219, but we'll see. I'll keep it on. I keep this thing on watch. It's just not. I need to see how it closes today. Yesterday I had a little bit of an update. The fact that it's gapping down and pushing down lower today, not really that great. This right here is kind of struggling. So if this rolls back over, then maybe Tesla could catch a bid. But this could just be a pullback, right? This thing, it was moving up pretty strong. And if this moves up hard, then you're gonna see stocks and stuff come off pretty good. More than likely. It's not a guaranteed fact, but a lot of people will get out. They'll rotate their capital, which they already are. We've already seen that. That it's the market is no longer just propped up on tech. It used to be like that rally. A lot of it was just all propped up on tech. If tech goes, so does the market, but not necessarily this time. Because the equal weighted S&P 500 is up too now. So that means putting this equal weight on all the stocks, it's up. Right? So with this being up like this, that's saying your underlying market breadth is good. So yeah, it's no longer just tech holding the marketplace up. The rest of the stocks are participating. And we can see that with the Russell as well. Although the Russell had the steepest pullback. And I did catch that short, but it was last year's trade. So when I closed it out, the profit went towards last year's P&L. So we started a new year. So the P&L on all my accounts now is back to zero, right? Or not zero, I'm up on the account, but just barely. It's up 1%. So I need to get some more trades in there. I just don't know if I want to sell calls or what. But give Tesla a little bit of time, John, and see if it finds support. Does the carpet match the drapes? It does. Good morning, Janet's thoughts. Morning, Johan. Looks like Bitcoin had a pretty clean, fast test of hourly support this current 1 hour candle. Do you think that was likely the best entry today will present? Yeah. Yep, I do. Because it's moving away. If Bitcoin is going to make a higher daily close today, that would have been the entry. Absolutely. Yep. And since you noticed that, Clipper, good stuff, bro. Good stuff. Good things are heading your way. Good things, good things. You noticed that, and yeah, that would have been the entry for bullish continuation. But we'll see. I mean, it's definitely struggling at resistance. It needs to break out. SPX is down today, but it's getting a little pop off the open. Well, there would be your opening range. So the SPX is, it's bullish on the day. It's just down because it's gapped down from yesterday's close. Right? So it'll probably go up there and retest resistance either today or tomorrow. I don't think you're going to get a whole lot of movement today and tomorrow based on CPI. CPI is a huge data point. So generally, whenever you got a big data point coming, the market will trade sideways and in a small range. You've already hit the expected move for the day. Let me go make sure that that's actually the truth and I'm not just making that up. Yeah, you're you're trading $5 lower than what today's expected move was. Today's expected move was $15 and you're down 21. So, yeah. Good morning, Run Mountains. Heath, how do you feel about the Aussie yen long you posted on Twitter X? I'm still waiting for support. I don't like it right now. It's too much momentum, but I mean, it tested the level that we were looking at, or one of them, right? I don't know what this is. It's a higher time frame level. Yeah, it's old monthly res. I don't know why it's all the way over there, but it's old monthly res. So today, I mean, buying it today is a little bit more risky. I think what we could do is tomorrow we could see if we get a retest of this price and see if it holds. If it does, then we'll take the long. I still like it. I still like it as long as sentiment is still bearish. Oh wait, it'd be, I am not a US citizen. I just lied. This website made me lie. All right, so now it's not as bad as it was. See, it was 90% of retail was net short this. So obviously they're closing positions because it's working out for them. Retail is usually wrong, but occasionally they're right. They're not always wrong, but they are mostly wrong. Usually they are wrong. And I still think they're wrong. So sentiment still says that it's a long, right? Because 69% of retail is short, right? If 69% of retail is short, we typically want to look to be the contrarian, and we will look for levels to do that. So It looks like it's failing, and it is at resistance. But this is an old monthly res here, so if it holds here, we will look to buy it. I didn't buy it this morning because it had too much momentum coming into the level. But, I mean, I could have missed the trade by not doing that. Buying there would have been an aggressive move, to say the least. But it looks like that was the play. So we'll keep 96,147 in line, or you could watch for a retest of 96,303 and then buy that. Like in the next hour, you might get a pullback down to here. If you do, as long as it holds, you could buy it. And you wouldn't have caught the very low, but I mean, that's still a good entry. I would take that. But you never know. With the momentum coming into it like that, I was a little bit hesitant to take it, but I should have. As it's moved what? It's already moved 30 pips, 32 pips. So it would have been a profitable trade. I just missed it because I didn't have it pulled up. Which I didn't really miss it because we were discussing it in the Discord. Somebody asked me in the Discord if I liked it. I said it's got a little bit too much heat right now, I think, is my exact comment. And that was at 9:13 this morning. So just before the stream started. I didn't, I thought it was just moving too fast into that area, but now we can see it's holding. But if it continues to hold tomorrow, I would look to be a buyer for sure. I like it higher. Does it mean that it's going to work? No. But I think as long as sentiment retail is still so bearish on it, I think it's probably going to break out soon. This is it's consolidating in a range, which is what we like. We need it to stay above this, though. If it gets back under that, then it's going to be looking more bearish on the daily time frame than bullish. On the weekly, it still looks good. Like literally almost retested last week's open. But last week, you got the breakout. You didn't break out above this area, but you broke out higher on a close. You got a higher close. So that looks okay. But it's definitely sideways. But I think if it does go, it'll go pretty good. It'll trend for a while. It's been in this massive range for months. How many? Let's see. 1, 2, 3, 4. Yeah, a bunch, right? You can just see this was like the breakout move from here, and then it's just been chopping ever since. The monthly doesn't look great, but it's just 9 days. We're just 9 days into the month. But this month looks terrible, right? Anybody looking at that's going to be looking for downside continuation. The sentiment is the reason for the long. So we'll keep those two levels up there and we'll keep them watch. But I'm going to take it if I get a retest of that price. Can I look over OPUSDT on KuCoin? Yeah. I've never heard of that. That one's new to me. The same thing. It's pulling back. You already had your alt season, right? You already had your huge pump, and it looks like the buyers dried up around $4, and now it's pulling back. This is going to be daily support until you get a daily closure under it. $3.17. So could you be a buyer here right now? You could be, but it doesn't look good. The momentum blasted right through the price, and you're just getting a retest of the midpoint of that breakdown. So I wouldn't buy it now. I would want to see it chop around here for like the rest of the day, and then maybe at the open tonight or the close of today's candle, maybe then buy it and see if you get that bullish pop. But this is just a retest of a breakdown. I mean, you can see that it's a steady breakdown. Breakdown, pullback, breakdown, right? I mean, a clear expansion lower. However, it is at support. 317 is going to be your support. And if you close today's under it, then it's no longer support. You can consider it busted. Bullish engulfings and uptrends off of support is a good signal, though. So, yeah. That's why you got the pop. It traded down to the 50. People bought it. And you got the pop. Or at the very least, shorts covering. But once again, I don't know the fundamentals of this coin. Interested on your thoughts on ETH BTC if you have a chance. Yeah. Ooh, man, Bitcoin is destroying Ethereum. Yeah, it's not looking good. You're in the midst of a fresh monthly breakdown happening right now as we speak. Last month it tried and failed. And you've just taken out this swing low right here. If it's going to bounce, I would expect it to do it now. If it's going to be downside continuation, then you're not going to get that bounce. It looks pretty damn bad. You've had a one-sided move to the downside for many days in a row there. You had one bullish day and then boom, boom, boom. This to me looks like this thing could get going. It could really start to pick up momentum now as a lot of people are getting burned out of their positions. But yeah, that big swing right there. Now that you're under that, you would assume it would get support. I used to trade this thing on Kraken, but I don't anymore. It's too volatile. I just trade mostly Bitcoin now, and I take a couple swings at a momentum trade. If an altcoin is moving really good, I might try to snag a few Tether or something like that. But most of the time, I'm looking to enter positions on Bitcoin. But it doesn't look good. Bitcoin's beating the snot out of it. I mean, today Ethereum is down 3%. Bitcoin is down 0.2% on the day. But this candle in line looks all right to me. It doesn't look terrible. There's support. And then right there is going to be demand as long as it holds on a closing basis. You got 8 hours left on that. Do we have lower lows? Yeah. Lower closes? Yeah. Well, not compared to this close, you don't. So that's what people would call hidden bullish divergence. This is where I'd be buying it. But down here. And you'll know if you're wrong or not. Probably in the next hour or two. Right? If it's going to break down, you'll know in the next hour or so. But this is that daily demand, and then this is daily support. So these are the two areas that you would want to buy it, and you could do it now because you're testing the 50. But this was a nice bullish breakout day to get you back above the 50 or coming back in, and you're testing it now. So you could technically buy this. You're under the 21. I don't like that, but this is a buying opportunity on ETH. If ETH is going to get any kind of strength whatsoever, just trading versus the dollar, not trading versus Bitcoin. Versus Bitcoin, it's getting slaughtered. But trading versus the dollar, if you're going to have bullish continuation on Ethereum, this is a buying opportunity. We got exactly what we want to see. But the problem would be, where do you put your stop? If you're using a lot of leverage, you're going to have to get your stop under today's low. If you're not using a ton of leverage, like if you're using 2x, maybe 3x leverage, you can get your stop all the way under this low. You'd be better. But you would almost need it to go all the way back up to daily res to be a 2-to-1 risk to reward, which is not really that great. So, yeah. I don't know. I guess the reason why it hasn't broken out is because Bitcoin is just beating it up. So Ethereum versus the dollar, I like potentially for a buying opportunity. It's just trying to figure out where to put your stop. That's going to be the most difficult part of this trade. So let me get back up over on Futures Pro on weeks. If you want to trade on weeks, if you can't, if you don't have a crypto exchange yet, there is a link in the description, and they will allow U.S. citizens to trade there. No KYC and all that. All right, so I got ETH on the other monitor up there. I'll keep an eye on it. If it comes back down there, I'll watch it for a potential long. And what I'm saying is, I'm saying here, 2241. If we get a retest of that and we don't slice through it like a hot knife through hot butter, like this, if we don't get something like that, I'll buy it. If it comes back into this area. All right. That's ETH USD, not ETH Bitcoin. I don't like ETH Bitcoin. I would not buy it. And the dollar is currently up today. 0.3%, which isn't a big day. It looks like a big day, but it's not. 0.3% is hardly a non-event. But it looks like it's getting ready to break out to the upside. What's the TLT doing? It's down, but that's based on a gap down. And I closed that trade out too soon. I closed it out here. I should have waited one more day. Could have made $50 off of it, off of each call. But we'll see if support can hold. $96.29 on the TLT is going to be daily support. If you get a daily close under it, leave it alone because it might come back down to $93.95. But yeah, I mean, I bought it based on that. But it went all the way up and then came all the way back down. So I ended up closing it out for a small loss when I should have just held it one more day. I didn't want to wake up to a big gap down because you can't protect yourself against that downside risk. Your stop won't get triggered until the market opens, and wherever it is trading at that time, that's where you'll get filled. So you don't really want to hold it with a stop loss because of that. Because you never know. It could gap down, but you could still trade back up to your entry and then exit the position for a small loss. Whereas you would automatically get filled on a breakdown, gap down on the open, and you would get filled at the opening price. And that could hurt. That could hurt bad. Depending on how many of these you bought. Do you have time for LTCN looking for a good spot to buy it? When, moon? Soon, I guess. I mean, it's not breaking down. It keeps breaking out. I don't really... Is this a crypto or what? No, it's not. Oh, it's the Grayscale Litecoin Trust. Yeah. Getting killed. You had to know it was coming because Litecoin didn't get this big, massive run up. Right? Like this thing did. I think I looked at regular Litecoin and it didn't do nothing. Yeah. It didn't do anything through that period of time. But I guess people are buying this because I don't know why. Obviously, it had a lot of buying power or pressure going up, but I would not buy this. This looks like a blow off top. Yeah, I would not buy that. You've literally taken out, almost 3 weeks of price action in one weekly candle. That's generally what we call a blow off. So I would not buy this. This thing's probably coming down, down, down. Probably back down to $6. I wouldn't short it either because the move is the short already happened. The short would have had to been at this price. 1625. That's where you would have taken the short if you were shorting it. And if you did, good job. But I don't think these things have options. I know the Grayscale Bitcoin ETF doesn't have options. Maybe it got hyped up based on the fact that everybody thought the Bitcoin ETF is going to get approved. Tomorrow's the deadline, and I haven't heard nothing about it. I can see what's going on the Twitter to see if there's any mention about it. Bitcoin News says this is not a sell the news event. How do they know? This tweet was posted 4 minutes ago.
The listing agent, or I should say, the crypto community, expecting a call from the SEC any day now on the approval or rejection of the spot Bitcoin ETFs, though approvals are pretty widely expected at this point. Joining us right now and what that could mean for crypto at large, John Palmer is the president and CEO of Digital. It's a separate entity from parent company CBOE Global Markets, which is the listing agent, or I should say exchange, for spot Bitcoin ETFs. CBOE Digital is not involved in the process of launching the ETFs, but it would benefit from their approval. What do you think we're going to hear, and is there a wrinkle in what we might hear?
Well, I mean, I think you've seen quite a lot of progress made, really, the last couple of weeks. Even yesterday, we saw some back and forth between the commission and the issuers on the S1s. So I think that's good sentiment, right? I mean, progress here is good. You're seeing the agencies engage. You're seeing the issuers engage, and all the filings from the exchanges are all up to date at this point from what we can see.
So let's assume that there's an approval.
Yeah, but yesterday, Gary Gensler put out a tweet saying, don't invest in cryptocurrencies, blah, blah, blah. I mean, that freaking tweet got like something like 50 million views.
Certain ones that get approved, do you think it's all of them get approved at the same time? How does that work? And then what does it mean in terms of,
so this
as
guy's
they get
from
launched,
SIBO.
How much Bitcoin they're going to be buying in the market, what that does to the price? Have we already bought the rumor, sell the news? What's the thought?
Yeah, it's obviously a pretty big competitive milestone, right? We have quite a few different issuers with filings in. The SEC has different dates for different rule filings on the exchange side that they can approve, but it's there's a couple different scenarios, right? They could, as you mentioned, approve a few of them out, or they can approve them all at once. So time will tell, I think, between today and tomorrow how that's actually going to go.
Yeah, nobody knows. Nobody knows. Professor Gary. Yeah, this is that tweet. I mean, if we're considering an investment involving crypto assets, be cautious. Crypto asset securities may be marked as new opportunities, but there are serious risks involved. Yeah, I mean, he's such a, oh man. They have their own version of Jim Crater. Yeah, I mean, I don't see anything like you would figure the feed would be all blowed up with that stuff. But I mean, we won't know till we know. So that's probably what got this going, or simply the fact that, the people will watch Bitcoin dominance, right? And if Bitcoin dominance tops out, people will get long some of their favorite alts and hope for the best. It is a strategy. It's a legit strategy. The problem is finding out which one of them is going to be the one that does it, right? Because not all alts have mooned. Most of them are done. I mean, you can see here, this list is pretty extensive, and there's literally only a couple of these things that are up. None of them are up today. Wait, Sol is up. Solana. So, I mean, yeah, it's probably done though. It's probably done. It's probably had its move, and it's probably going to get sold off again. Solana's probably a short, in my opinion. But I could be wrong. I mean, you could still get that one huge spike to the upside. We got something like that on Bitcoin as well. Ethereum just did come down and move, and I did not take the entry. It just did what I wanted it to do, and I was not paying attention again. Right here. That's literally where I would have taken the entry. But I missed it. Might get another chance. I don't know if we will. We'll see. But yeah, I mean, I don't, my reaction's mixed based on what I think is going to happen with the ETF. It could definitely be a sell a news event, right? Maybe for like a week or two or three. But then ultimately, I believe Bitcoin would find support, calm down that weekly RSI. You know what I'm saying? And then we get closer and closer to the having Bitcoin slowly starts to build its bullish momentum back to the upside. That's what I think would probably happen, because so many people's already invested into Bitcoin based on the fact that they think the ETF's going to get approved, right? And that's why you've got so much inflows happening currently. I mean, they're watching the ETF. They're waiting for that approval. It's a 50-50 shot what it's going to do. If it's going to break out and continue higher, or does it, is it done? Does it roll over for a couple weeks? But like most of your high flying alts are all doing the same thing, right? They're all pulling back. That's going to be based simply on the fact that your Bitcoin dominance is so strong, right? Some of them might still get a bullish pop or something, but I mean, I would say the majority of them's done. Which one did this one, which that's Bitcoin. Which one was I looking at though? There was one in particular. ADA? No. Sol. Yeah, it was Sol. Because it's up. It's up today. So I'm gonna keep an eye on this over here on this monitor. And we'll see what happens. Let me just pop it in over there. Yeah, I would be looking to take a short on it at 105.01. It's 104. It's 105 there too. Yeah. I like it lower. Might be able to short it here in a minute. Ethereum is pushing back down if you are interested in taking a long on Ethereum. But Ethereum is an alt, in my opinion. But Ethereum is one of the big boys, so I don't know if I'd classify it as an altcoin. This is definitely an altcoin. And if it is done, I definitely want to jump in on this because this thing made a massive move. You're welcome, Clipper. PayPal, please. Let's go look at PayPal. It's having a nice day today. So it has been getting absolutely wrecked. So the question is it done? My response would be to watch 61.74 for a daily close above. But the problem is you still got supply right there. Now you are back above the 50 up here, but this could be a trap. This could be a trap. So you could wait for it to drop back under and then maybe look for a retest of a specific level to get short. If you think it's going to go lower. If you think it's going to go higher, then you definitely want to see it break out. Like, this is one of those trades where, like, I might only want to buy it if it were to break out. And I know that is completely not what I do. Usually I'm a buyer at support, but that's only if the asset's in an uptrend. This is in a clear and obvious downtrend. For now, right? It didn't have that massive run up on like stocks did, like the S&P 500, like everything else, like tech, right? I would consider this tech. It's fintech, right? PayPal is fintech. So but it didn't get like the love other tech stocks got. You got to ask yourself why. But we could probably, yeah, we'll keep this one on watch. Let me see. Old Rope 66. Yeah, we'll put this one on watch over here. Oh, I already have it up there. Good. All right. So, yeah, I'll keep this one on watch to see what it does. Oil just got a nice bounce. Oil just got a nice bounce. S&P's still flat on the day. Pound dollar ain't doing nothing. Euro yen isn't doing nothing. Let me get Aussie yen up over there. I'm going to kick myself in the head if I miss that Aussie yen trade. But watch PayPal. You definitely want to see today close above daily res, which is yesterday's close. But this could also be a short entry. I've already got one day trade on this, so I got to be very careful about taking a day trade. We could do, yeah. Yeah. Yeah, the skew's with us to the put side. See how the skew's getting higher down here? So you got 35.77 and then 35.98, 36, 36.44. So that's good. So that means we could probably do like a $4 wide spread on this. Let's see, buy the 62, sell the 58 for $1.56 for a max profit of 245. See, that's what I like right there. That's on a $4 wide spread. Let's see what we can get on a $5 wide. It's more. So yeah, I think the $4 wide spread would be the best decision. But it's going to depend on whether or not this thing closes under this or not. Like, this would be one of those intraday watch and see what happened type of trades. Do the spread instead of just buying the outright put. Because if you do the spread, your risk is a lot easier to manage. Right? You don't want to lose. You don't want to see this thing gap down $5. And I mean, you do want to see it gap down $5 if you buy a put, but you don't want to see it gap up $5 either, because you'll turn 243 into 85 cents real quick. And that'd be a heavy loss. That's why I like to do the spreads. And when the implied volatility is going in the right direction, which it is, we can put these spreads on for cheap. So really all I'm risking is $153, but I only have a max profit of 247. But I wouldn't be looking for the max profit of 247. I would probably close the trade off once I made my money back. Right? So we'll keep it on watch, and I'll leave that spread up there. But we'll see how it plays out. I mean, a close above this today, and I'm not taking that short. It's just, it's in one of those precarious places. Like, it had a nice day yesterday, then it gapped down, all the way down back to $60. And now it's back up there. So it definitely looks like it's being bought. Nice day here. It could have bottomed. We'll see. So technically what we could do is we could watch for a break and close above 63.07 and then just buy calls on it for the breakout. But there's a good chance that it could be a failed breakout like this here. So like this happened to me on one of the stocks. Broke out, closed above, you buy it. And then if you was able to take profit on the next day and get out, you'd have made a little bit of money. Not a lot, but a little bit. And that's okay. But it failed. The breakout failed. And that's the one bad thing about taking breakout trades. Well, technically it did break out there and it failed. So, yeah, I don't think I would buy this unless it got above 63.01 and showed me bullish momentum. Because I'd be too afraid that the breakout would fail again. But also at the same time, if it does break out, since it had this failure, that could mean that they bought the dip. And PayPal's probably going higher. Let me run the unusual option scan again and see if PayPal's got anything going on. Boom, boom, boom. We got more stuff, but no, still no PayPal. And most of it is still like the ones that I would be interested in buying are all out to Friday only. They're not buying further than Friday. There's a couple Nvidias that's out to Jan 19, but yeah, it's just 10. That's next Friday. Like, come on. Mara, someone bought 3,000 calls on Mara, the $31 call for Feb 16. What did I say? Feb 16, right there. And they bought the $31 call. There they are, right there. This just happened today. It just happened. Like, because it wasn't on the scan a minute ago. I just hit the scan again and it popped up. It's one trader. It's because it's only on there one time. I'll show you what I'm talking about right here. It's one trader, about 3,000 calls. So someone thinks Mara's going up to $31 by Feb 16. Ethereum is testing hourly support. So I don't know if I would be a buyer on Ethereum. If it closes under that hourly support, I would leave it alone. But yeah, PayPal needs to be above 63.01, or if it fails here, it's a short. I believe 50% chance of ETF refusal, then volatility to the downside. I will add 20 to 30% recovery will show retrospectively this bull run driven by fundamental flows due to banking problems caused Klaus Schwab. And people know something, problems in repo, according to Eurodollar guy. I don't like that guy. Dude, that guy's been claiming freaking bear market for all of 2020, half of 2022, and all of 2023. Like, at some point, you got to admit when you're wrong. Right? Am I right? Like, how do you trade that? Is he even a trader? Right? If he is, how is he positioned? Does he tell you any of this stuff? No. You want to know why? Because he's a fearmonger. Fear sells just about as much as good as sex does. Fear, sex. Those two things, people, that they'll consume the shit out of it. If he would show or even tell us positions that he's taken, how he's positioned, you know what I mean? Show us something, show us a portfolio, do something. Prove that you actually got skin in the game, then maybe I would take him more seriously. But yeah, I mean, there's problems out there, trust me. But he never has anything good to say about anything. And secondly, he never gives you any advice whatsoever as to how he's positioned. Or it's not even advice, just how are you trading your own wrongness for the last year and a half? Like, you've lost money, obviously, if you've been a bear this entire time. You've been incredibly wrong. So you just be careful. I mean, you can consume whatever you want to consume, whichever YouTuber you want to consume from. But like, don't take what he says to heart. Trust me. That guy is completely he just popped up on the scene out of nowhere And he's already selling Eurodollar memberships, and it's just like, what? Come on. Why would you even buy that? So I can learn to be wrong like you for 2 years? I mean, we trade the markets. And in order to trade the markets, we got to be in the markets. We got to put skin in the game. We do put skin in the game here. Yeah, there could be something wrong with the repos. Yeah, there's a lot of things that could happen. For instance, the escalation over there could happen. It could turn into a full-blown war against the U.S. and Iran. Then what? You know what I'm saying? Then what? Yeah, recession, baby. Then it's probably time to start buying a shitload of puts. But I mean, sell some calls, do this, do that, get positioned for a downside move. But as of right now, the markets are bullish. I mean, they are bullish. You seen JP Morgan? Like, look at this stock. If the banks were in so much trouble, why are they literally all, like, most of them have recovered since March? Most of them. Right? You can go down the list here. These are all the banks. All of them have had just rapid acceleration over the last month and a half. What the hell is that? That's got to be a misprint. I mean, all of them look like this. Goldman Sachs, boom. So the banks aren't hurting that bad. I mean, I could understand a spike above this swing high or this swing high and then it rolled over, but this is not a bearish move. Could something like this end up playing out again? Yeah. Yeah, it's possible. It did it then, right? Boom. But that was November 2022. Then you had March, which was a quote unquote banking crisis. When it really wasn't a crisis, was it? It was just 3 banks. 3 banks out of 4,500. I don't think you can classify that as a crisis. But they keep saying crisis. Well, most of the big ones have already recovered from the crisis. So, I mean, is there really a problem? You got very intelligent investors out there. You mean to tell me that all these buyers are wrong? Well, they haven't been. That's for sure. If they start taking profits now, they made 30% on some knowledge. So just be careful on your Uber bears out there, especially the ones that don't show that they got any skin in the game. Your thoughts on trading FX on the daily versus the hourly time? Thank you. I love it. I would much rather see you guys getting used to, basing your trades off of the daily time frames and then the hourly for the position, like I do. But I mean, some people can't even stand looking at daily charts. They're so close-minded on it. Like they just watch a 5-minute and that's it. And that's why they're constantly getting turned around in the marketplace. You need to see the overall theme that's going on right now. Aussie dollar could be a buy. This could also be the reason Aussie yen is down. But the dollar has bounced, right? But it is definitely struggling with daily resistance here. And then this is a quarterly level, right? That's quarterly supply right there. So the dollar's struggling with that stuff. If it can break out, then I would expect Aussie dollar and probably even Aussie yen to go lower. But that's a bullish candle. That's a bullish candle. And here we are bearish today. So, and the dollar's bearish. Oh, sorry, the dollar's up. But yeah, I mean, you can see better on the daily. You can see where the levels are that you're literally looking for. Like that's daily support, a close below that. If you don't bounce back above this within the next 3 days, I would look for downside trades. If you do close under it today and then tomorrow your candlestick looks like this, then I would be looking for this and I would buy it there. You could buy this in anticipation that that's what's going to happen, but there's no guarantee it is going to happen. So in that scenario, if I think a trap is about to be formed, I want to let that trap happen, and then I want to let the bullish reaction occur, and then look to buy any pullbacks I can. But yeah, watch the daily, get your daily levels, get your weekly levels. This is old weekly resistance here, and you can see literally how you're bouncing from it. So is it going to be a cup and handle, or is it going to continue with its breakdown? As of right now, the last several weeks, it's been in an uptrend. So we typically want to stay with that. So we'll see if today ends up being a trap or not. Tomorrow or the next day, we'll know. Now we close under, like if we close where we are here or lower today, and then tomorrow you get another lower close, it's not a trap, right? It's not a trap. That's just how I look at it. But we could be building a trap here, and we'll see. If it does, we'll buy it. We'll buy this baby and this baby here, if it's not too late on this one. For sure. Absolutely. I would much rather you do that. You can look at the daily candle. You can see what it's doing. You don't need to go intraday to see what it's doing. Right now, you're trading at the midpoint. So at best, you're going to have a bunch of down candles. It tagged resistance, and now your candles are moving up, right? You can see that all in the daily candle. And then if you drop down to the hourly, you're going to see just that. Yep, you got a down day, boom, and now you're going up. So, yeah, we might have missed this freaking trade. We did miss it because it did provide entry to perfection, and it also provided a 30 pip move, which is what we typically look for. Then we take profits and we move our stop to break even. That way, if we catch a longer term trend, we're in it, and we're in it with a decent sized position. Hello. Is this the trap on Dixie? Yeah, it might be. It might be. We'll see. I mean, only time will tell. I think it's literally waiting for CPI, and it's just trading sideways. This was non-farm payrolls. It should have been a bullish day for non-farms, but it wasn't. It was a doji indecision, and then the next day was bearish, but today you're bullish. So it is choppy this week, waiting for that CPI number. So yeah, I mean, this is daily res also, the near term. but I would watch this one instead. If it closes above this one today and then tomorrow, then yep, it's trap being set. And it's in a downtrend, so we do want to look more for that trend to continue. But I think it's gonna all be up to the bonds, the bond market, right? We need the bond market to do something. Are you going to continue with this magnificent uptrend, or are you rolling over? And that's the worrisome part right now. All eyes are on the bonds and the steepening of the yield curve inversion. So the steepening will, in my opinion, cause bond markets to come off a bit. Once they start cutting rates, we should see the TLT go up. But this will probably have an effect on the stocks, the steepening. It's got to steepen. It's got to get out of there in order for the recession to happen. If there's going to be a recession. But we've been inverted for a freaking long time. But this move down right here is the reason stocks aggressively moved back to the upside. So is this just a pop and it's going to roll back over, or is this done? Was this the pullback and now we're going to see it go up? That's basically what I'm looking at, what I'm watching. I'm going to do whatever this thing does, or try to position myself that way. So I'll give it a couple more days here at this level. We'll get CPI and then see what happens. Yeah, that's how we'll play it. Doge. I have not looked at Doge in probably a year. It has been a long time since I've looked at this asset. And a good thing, too, because it has done nothing. All of 2023, it did nothing. It traded sideways in a huge range. Once again, if your Bitcoin dominance rolls back over, then I would potentially be look at ETH did. I would watch for potential support. ETH traded right down to that where I told you to look. That's where you would want to put your entry. I don't know if it's going to continue to go up, but that is the entry. It is holding for now. So it did give us an opportunity to get long. It's just, I don't really like it. But we'll keep it on watch. Yeah, Doge looks bad. It's breaking down from support right now. Let's go to the daily. See, you're breaking down from your support. But it's about to close. This could end up just being a wick at the end of the day. If it is, then look, to buy it around that area. Or if you got hourly supports around the area, watch the hourly support. Like you kind of got one right now, right here around 7738. But if this hourly closes under it, I would leave it alone. If it doesn't, then maybe you could buy it and maybe it goes up. But it looks like it's got a lot of selling pressure. That was a boom of a day. Boom. Like, yeah, I think it's done. It doesn't look great. I mean, it's just the dominance is too strong right now. If the dominance had a small pullback, like if the dominance would have stopped like right in here and rolled back over, then I would say, yeah, look to buy support, right? But it's not. It's literally right back up at the top. So that's why your alts are pulling back, and some of them are pulling back hard. It's because of that. All in all, yeah, it looks like it's going for last month's high, which is this candle right there. But this is not a tradable asset. It's a percentage of a gauge of what's going on overall in the markets. And right now, alts are pulling back hard. If this breaks out, I would be looking to short some of those high flying alts, like Solana, for instance. Like Solana. But we'll see. He's not a trader. Some macro analysis. I don't like him either in many respects, but repo thing is just objective. Gotcha. Goldman and other big banks would cannibalize normal mid-tier banks. Be interesting to see performance versus small cap US banks. Well, on that list right there is all banks. All the banks. That's all of the known tradable banks that I know of. So if you want to pause this portion of the live stream and get them all, be my guest. But as far as I'm concerned, these are all of the banks that are tradable. There's the top. So DB is the bottom. There's DB. So you still got Citibank, and then TD Ameritrade, Ally, USB, Key, CMA, BLK, BXX. This is actually index, but you can do that, and that way you can watch each and every bank in itself, or you can look at KBE as a bank ETF, and then obviously XLF is your Spider's financial ETF. So like I've looked at the banks and they're all recovering. Most of them have recovered. There's KBE and KRE. So you got both of those are ETFs, banking ETFs. But the rest of these are small banks. SoFi didn't really recover that great. NCB neither. UBS, yeah, one could say that has recovered. That thing is freaking, is that all-time highs? No. No, it is not. Not even close. They might have done a split or something. But, I mean, since March is what we're gauging. Since this down in here, it's recovered. 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 I mean, most of them have recovered, my bro. Most of them have recovered. Right on. I started recently, and it seems to be super helpful in recognizing overall trend for sure. The daily is a much better aspect of the overall trend after a year plus of hourly trading. Yeah, no. See, you're looking to buy those daily levels, but when you go into the hourly, it's to get a tighter entry. Like Doge was a perfect example. So let's go back to Doge. Perfect example. So we know this is daily support, right? We know it is objective support. Now, we don't know if the market is going to respect it or not, but we do know it is. So then what you can do is you can go into the hourly time frame and you can see that it was respected as resistance here, until it broke out. Then it came back down and now it's broken down. So you can actually use the hourly now as that support. Is that support close to the daily support? Yes. So what you could say to yourself is, okay, I don't know which way this thing's going to go, if it's going to continue to break down or if it's going to bounce from here. You simply watch this. Are you closing hourlies above this price? If your answer is yes, then you can take a shot at it and just use this hourly low as your entry or your stop or your risk. Like, enter, stop loss. And then all you really need is for it to get like just barely back above daily support. And you can take profits and move your stop to break even. And then if you are correct and it does end up holding as daily support and you do get a move higher, you will be positioned perfectly for that. So that's where most people forget about, right? They forget about the whole daily aspect. And then they're just focusing on like hourly supports and resistance levels when they really need to get those daily and weekly levels in there too. Then you look for those hourly supports and resistances that are close to those daily levels. Your hit rate will get much better and you'll be more accurate, essentially. Right? That's the whole concept right there. Now, pairing that in with using the RSI to gauge momentum, the momentum is down. So on a technical basis, one could say objectively, the bears are in control of this asset as the momentum is under the midpoint, right? And it's not just under it, it's under it good. And you're not even oversold yet. So like there's room to go to the downside to hit oversold. So using these levels in conjunction with indicators like this, right? That can help you get better trade entries. Now, with that being said, I also have to say that it will not always work. All right? Because we can't see into the future. We don't know what's going to happen. That's why we have to use stop losses to stop us from losing our money. And we only want to bet 1% or 2%. Whatever it is that you're betting, you keep that consistent. And then once you learn to trade like this, you will be more consistent. And you got to be consistent before you will ever reach profitability. You must first reach consistency. You got to trade the same way every time. It's got to be the same way. And over time, you can review your results. Are you losing money at the end of the year? If the answer to that is yes, then there might be something you want to fine tune. If the answer to that is no, then welcome to the club. You've made it. You now know what to do in order to make a trading career successful. It's about managing your losses first. You got to do that first, because we can't see into the future and these markets are volatile. So as long as you're taking those 1% hits on your losses, when you get those 10 or 15% winners, it's going to wipe out all those losses. And now you're going to be in the profitability. Then you're going to take a couple more losses, and then you're going to hit another, big winner where you got positioned perfectly, and your P&L just goes up and dips, up and dips, up and dips, up and dips. That's what you want your P&L to look like. You want your P&L to look like this, not this. If your P&L looks like this over time, you're doing something wrong, clearly. You don't even want it to look like this. You want a smooth equity curve that moves slowly up into the right with little dips. Those are your losses. So we can stretch this out so I can, these little dips. That's loss, win, nice win, loss, 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 win, big win, love it, loss, 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 win, loss, 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 win, loss, loss, win. You see, that's the rhythm. And once you guys really fully comprehend that, you're there. Like, you just don't know it yet, because time hasn't taken hold of it yet. In this scenario, I would not buy this because it's under the 50. I have already made that clear. I just wanted to show you essentially, like, for instance, the Ethereum trade, right? We could take this because it's not below the 50. And then we go in there, and where's our hourly support at? Look at that. Hourly support's happening right at that daily level, right? It is a daily demand level. These used to be called Heath levels. Daily demand, Heath level. Daily supply, Heath level, right? But you also want your main support. So put a line on both of them. As long as this thing closes above this today, there is a slight chance that tomorrow it goes up. We don't know. However, we can use those lines to gauge where we want to look for our entries. Now, we don't care about the RSI on any other time frame but the daily and the weekly. That's it. That just helps us gauge trend, strength of and momentum. Like, the momentum is up, the trend is sideways, but it might bounce from here. So there's hourly support there. So if you are going to go long on Ethereum based on all of those things that I just said, this hourly candle, when it pushed down into here, that's where you would have taken your entry. And then you would be risking your whatever, 1 or 2% down there. Boom, boom. So then all you needed to get to is there. And you will have a 2-to-1 risk to reward. Then you can move your stop up. And then if you get lucky and this thing ends up trending hard and strong to the upside, you will make more money ultimately on the small piece that you have on than you did on the original trade. And the original trade was a 2-to-1. So you made double what you were risking. You can wait until your P&L gets back to the same price, then you're looking at a 4-to-1. So that'll cover you for the next 2 or 3 losses that you're going to take, because you will take losses. You will. It's just, I don't win every trade. It's not about my winnings. It's about my losers. I keep them small. As long as you keep your losers small, over time, if you're doing this, you will make money. You will. That's it. That's technical analysis in a nutshell. If you don't want to use the RSI, use something else. But you definitely need a momentum oscillator. I don't like the Stokes because the Stokes are always at overbought or oversold, right? They usually, they don't really help you in the fact like the relative strength index does. Then that's what the RSI is. It's relative strength. Now, it's not relative strength versus another asset. It's a relative strength index. It's telling you it's giving you the gauge of, is this thing bullish or is it bearish? Right? And if you're above the 50, the bulls are obviously in control of the asset. If you're below the 50, the bears are. So you don't necessarily want to take those long entries down in there. It's not a perfect strategy, but it is a strategy. And if you do that over time, you will consistently make money over time. You're not going to get rich tomorrow or the next day or the day after that. But consistently, over a period of a year, you look at your portfolio. Are you beating the S&P 500? If the answer to that question is yes, then welcome to the club. You have made it. Do the same thing next year. That's when the money starts to grow. That's when the money starts to come. And then once if you have a full-time job, as long as you can show a prop firm, a good one, not one that you pay, right? If you have to pay the prop firm, they're not the right prop firm. There are prop firms out there that you do not have to pay, they pay you. That's the whole point of the prop firm. If you can show us proof that you can consistently bring home a return and consistently beat the S&P 500, we will give you money to trade, enough money so that way you can make a living doing it. So don't worry if it's just $100 account. Don't worry if it's just $500. All you need to do is prove that over a period of 2 years, you can beat the S&P 500. Do that, you're set. You're set. There ain't anybody in the world who wouldn't give you money. You could get hired at a bank. You could get hired anywhere. Or if you get lucky enough like on Bitcoin or something like that where you make, a nice wad, then you could just quit your job and go from there. But you have to live a trader's lifestyle isn't what a lot of people think it is. Like, I do not drive a Lambo. I wouldn't, even if I, you know what I'm saying? Like, even if why would I cash in my Bitcoin to go buy a Lamborghini? What good is a Lamborghini going to do for me? Right? I mean, if I was 20, maybe, but that's, you make dumb decisions when you're young most of the time, but you would be doing it just to look for girls or something like that. But you stay within your means, right? I don't have any outstanding debt. The only thing that I have to worry about paying every month is stuff like my cell phone bill, my insurance, and stuff like that. Cable, Netflix, and all that stuff. But it automatically comes out every month, so I'm good to go. I stick within my means. We eat out occasionally. We don't eat out every day. Some weeks we might eat out every day. It just depends on how I feel. But I mean, yeah, it's a much better lifestyle than working for someone else. I can tell you that. And you can make a lot of money sometimes. That USD JPY trade that I shorted, this short that I'm still in, just sitting in, right? I'm not in it anymore in my other portfolio, my real portfolio. This is a paper account, but I took the same trade on a real account, right? Same trade, same position size, same everything. I made $10,000, over $10,000 that day, this day. Did I think I was going to wake up and make 10 grand that day? Hell no. No, 10 grand is nowhere near what I expect to make in a day. I don't expect to make anything ever. Ever. I expect to wake up and come and look at the computer and try to make sure that if I do take a trade that I lose very small amount of my money. I'm not like other traders. I'm not hitting it hard because I never could keep money that way. But that trade paid me multiple times on the way down. This was probably one of the best trades I have ever taken in FX in my life. It more than quadrupled my account. But you got to keep it once that happens, right? You have to keep it. What's good is quadrupling your account if you're just going to lose it all later trying to hit that big winner again. Big winners only come, every so often. You don't get home runs every day. You're not looking for home runs, just small, little, tiny base hits. Lose little, lose little, lose little, win. Lose small, win small. Lose small, win small. Do that, and eventually you're going to nail one or two good ones. Right? Bitcoin, the perfect example. When I bought this thing, I had no idea it was the lows. We were saying that it could be the lows, right? We bought it here. Right in there is where we bought it. And then I bought it again there. Did I know this thing was going to 100x? No. I had no clue. Am I glad it did? Yes. Of course I am. So yeah, Bitcoin was a good trade. When it hit my bullish target of $35,000, I took profits. Those profits are now in my bank account, and I now use that to pay bills. So, but I still got, a significant amount in there for that moonshot if it ever happens. Just keep that stuff in mind because that's the best lesson you're ever going to get from anybody. And I got skin in the game. That week's account is a live account. It's a real money account. And that TD Ameritrade, or not TD Ameritrade, but this account, this is a real account. Real money. Small money, but, the majority of people that watch my videos are, they don't have a lot of money. They don't have a lot of money. So I'm trying to show you how to grow a small account. The problem is my main accounts come first. I got to make sure they come first because those accounts are the ones that pay me. I can't live off of a $5,000 account. And I'm sorry for that rant, but yeah, you got the right idea. The dailies, then the hourlies, and go from there. Your accuracies rate will get much better. But like I said, you're still going to lose trades and you're going to see trades go in your direction after being stopped out. Like, for instance, this day right here. Say you bought the yearly open like I did last year, right? Just the yearly open. We got a fresh daily candle, buy Bitcoin long. Boom. Put some leverage on it. Boom. Done. It just went up. It never came back and stopped me out. Well, this thing came back and stopped everybody out in 2 days. I mean, 2 days. Everybody that bought on that day got stopped out, more than likely. But it gave you another opportunity here. You wouldn't have been able to buy the yearly open, but you could have bought the daily support. And had you bought daily support, just sat in it, you'd be up nicely now. Right? You'd be up, depending on how much leverage you use, maybe 100%. It's just all in the risk and where you're taking those entries. You don't want to just take random entries at random places. Yeah, definitely use the daily. Get your directional bias, which is easy. If you can't tell which way the market's going, use some moving averages. These are trending indicators. Their exact purpose is to show you if an asset is trending or not. And I have a video on moving averages of how you can perceive what they are going to do. Right? But when they're splayed out like this, you got a strong uptrend. So you buy pullbacks, you buy supports. And then this is only to gauge, hey, is the bears potentially about to take over or not? But I mean, it does give some pretty stunning entries. It also shows you potential bear traps. All this was a bear trap. Every bit of this. This was a breakdown of support. Right here was support. We were holding, and then boom. Now, if you'd have bought on the 50 on this day, you would have lost money. The next day, it broke down. But then this became support. You got a higher low there. Higher low on price. You could have bought 26,750 or close to it, right? Intraday, maybe there was hourly support somewhere in there that held. Boom. Next day, you're waking up to something like that. It's just a good indicator to gauge what's potentially going to happen. It's not a predictor of what's going to happen. It does not predict. That's why we must mitigate our risks. All right. Do you still look for a 2-to-1 on the daily, or does this part of trading change? Thanks. I look for 2-to-1 entries intraday. I'm trying to get the best entries based off of daily and, support or resistance levels, but I'm going intraday to the hourly time frame to kind of get the range, the intraday range. And then I try to focus my entries around that. And I use the 2-to-1 risk to reward based on that. I don't like to take entries with more than a 15 pip stop. That way, all I need is a 30 pip move in order to hit that 2-to-1. A 30 pip move is a decent move inside of a Forex. Because when there's not a lot of volatility in the markets, Forex markets are going to move. They're not going to move much, right? They're going to move anywhere between 0.5% and down. Like some of them will have an average true range of like 0.42%. So that's roughly right around 30, 40 pips. That's why you have to get your entries almost like razor sharp in order to be able to get those small risk to rewards. Now, if you're taking a trade based off of the daily candle and you're looking for it to go to daily resistance, then yes, your risk to reward, you can change your risk to reward based on that. What it's going to do is it's going to mean you're going to need a bigger range to acquire that same 2-to-1 risk to reward. You're going to need a bigger move. You see what I'm saying? You're going to need a much bigger move. But on the pro side of that, your stop loss is going to be much wider also. So that will give you a little bit of room for any wicks through to stop out those intraday traders. Because it happens. How many times it's happened to me? I could, like, if I got paid $5 every time a trade, I got stopped out and then the trade immediately reversed and went in my direction and ultimately hit my take profit, I would be a billionaire. Yeah, it's going to happen. That's part of the business. You can't get mad or hate it. I mean, you always will, obviously, but you can't let it bother you so much to where you just give up. Because you can get it. I mean, eventually you can get it. We got a couple funded traders inside of the Discord. Some of them use my strategy specifically. Some of them use my strategy mixed in with a little bit of something else, right? My goal is I'm giving you this strategy. You can use it, but it doesn't mean you can't add other factors to it as well to help. But yeah, it will remove a lot of noise for you. It's just getting too caught up. Totally see what you do it. I just need more experience. I was referencing Michael Jordan, not the other Jordan. Oh, I didn't even see it. But yeah. According to Verilacool, I think he's in Jordan's thing and he says their portfolio is profitable. So I'm not dissing Jordan. I'm not saying he don't know what he's doing. I'm not saying he's anything. I don't have no problems with CTM. CTM had problem with me for some reason. I'm the one that got kicked out, not the other way around. They threw me to the curb, right? So that's why, it is what it is. Thanks, I'm gonna get some sleep. Yeah, we're gonna wrap this up. The rant sessions go on for far too long and people leave and it's all good. I've learned to tell them you keep you on the right path. I'll do my best, my friend. Sitting in a trade for days rather than hours. Yes, that is where you want to be. Yes. You want to nail those trades. Those are the trades you want. Where now you get into a trade, you're cutting your profits, you're moving your stop. Now you're playing with the casino's money. It's unrealized profit, and it may end up being realized. It may not. But being in it longer can allow you to adjust your stop as the trade progresses and continues to go in your direction. You want to continue to pull that stop up. You don't want to ever lose all your unrealized gains. Unrealized gains are good. Yeah, the rants do teach most of the good stuff. I mean, look, Ethereum is working. It still hasn't taken out this high yet, but I mean, that would have been a profitable trade if your stop would have been just like right under that. You could take profits now as you're struggling to get above this, since you didn't just boom break out. But it is what it is. They don't always work. That's why we manage risk. You guys have been great. I thank you so much. We're going to wrap this up because I'm starving. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading. If I missed your question, just drop it in the comment section of this video. I will respond. Thank you guys so much. I will see you Thursday as long as the internet allows me to. You guys have a fantastic rest of your day.